Sell in May and go away. This is the strategy that has worked quite well historically, and this is something that a lot of people are currently discussing because, hey, happy 1st of May, because here we are. And historically, it was especially relevant for the traditional markets, which we are so correlated to currently, unfortunately. So a lot of people are calling for taking our profits or taking the losses, selling everything, and then for the summer, relaxing, and then coming back in September, October, etc., when the next leg up of the bull market will actually happen. So I will give you all the pieces of the details here, and I will explain what my opinion is based on empirical evidence, what the market is currently presenting, because you need to evaluate this not based on some regular strategy. Oh, well, historically there is a probability of a sell and may go away. So there are certain factors that increase the chances of this being the case or not being the case. So I'll give you all these details and then we'll just jump in, because if you go to Twitter, you will see a lot of people really discussing this topic, and they're comparing historical data, that what happened during which years, blah blah blah. But in reality, you cannot really look just at the numbers. Those can sometimes play out, but in my opinion, it's nothing more than just a coincidence, and that's something that has deeper meaning in terms of the things that affect it. And then it kind of sometimes coincides and sometimes not. So I'll give you all these details and I will discuss what makes most sense. So let's jump into this, and quick announcement before we do so. Next week on Wednesday and Thursday, so May 7th and May 8th, I'm going to be hosting a 2-day online event, which I'm inviting you to and every single one of my followers. I'll link to it down in the description of this video. I'm going to be describing and actually showing my precise strategy for wealth building, and something I'm using in this bull run where I want to at least achieve a 10x for my capital in 2025. So we're going to discuss financial literacy, we're going to discuss blockchain, we're going to discuss trading, we're going to discuss passive income in crypto, because there are so many interesting instruments like funding rate arbitrage and staking, liquidity pools, etc. Because I'm not like trading. For me is like 3% of what we do. Like, we focus currently more on portfolio building, on liquidity pools, on passive income, on early stage deals, which most of you guys cannot access, and here you will learn how it all works, and proper financial literacy and money management in general. So this is exactly what I use throughout the years, and a lot of the stuff I don't even talk about on YouTube. So come join us. Link to the registration down in the description of this video. Once again, May 7th and May 8th next week, 6 p.m. Central European time, 8 p.m. Dubai time. You're gonna learn more than a lot, because 99% of people in crypto don't understand even 70% of what was going to be discussed. So come and get this value. So first of all, let's break this down. Let me give you piece by piece so we can analyze whether sell and may go away actually makes any kind of sense for that matter. Here is the first piece of details, the piece of data that really matters, and that is PCE. And as you might remember, PCE is the preferred gauge for inflation for Federal Reserve in decision-making when it comes to interest rates, quantitative easing, and etc., etc. So previously, we had a reading of 2.5, which was adjusted to a ridiculous 2.7, and the current forecast, and it just came out yesterday, I believe. So the forecast was 2.2, but actually it came out at like 2.3. So we had a big drop in inflation. And remember that the target inflation rate for Fed is 2%. So according to the most important gauge for inflation, we're 0.3% away. So this means, well, we'll get to what this means. If you look at core data previously was 3%, forecast was 2.6, and we came in line with the expectation. So it really dropped quite heavily. But this is not all. Another piece of news, like, it all comes together. That's why I'm always saying, guys, not to post stupid comments where you're confused. Always watch my videos from the beginning and until the end, and I don't care about YouTube ad revenue. I care about you guys actually understanding what the hell I'm talking about, and always watch every single video coming out or you'll be confused, and then you'll post stupid comments because you're just lost in the content I produce, because there's a lot of content and you really need to follow through with it and you need to understand what is happening. So another piece of news is this here. So inflation is dropping, we just discussed it, but we have US GDP, and it's actually something that we recently had yesterday, I think, a small dump in Bitcoin. This is something that possibly has caused it, because US GDP actually went into a negative. Trump was saying, oh, we're going to have 3% growth or something, because China right now is like 5.4% growth. So China is booming right now, even though Trump is saying it's not booming. But I don't know. It's always the question of, are they really artificially inflating the numbers? Is it all fake? Are our inflation numbers real? All of that is super questionable, of course. But nonetheless, official numbers is that currently U.S. went into the negative in terms of GDP. So the entire economy is contracting. And that's not a good news. So, and this is something that can be, explained by the tariffs. It can be explained by the fact that Jerome Powell is not reducing rates and is not, going into quantitative easing like China has done, like basically European Central Bank has done. So, United States is literally the only one sitting there and doing nothing and waiting for it to go into a recession, because that's just how it works. So, but overall, right now, if we look at these things, so inflation has gone down to close to the target of Fed. GDP is contracting, which means that the economy is slowing. $7 trillion of external debt needs to be refinanced at the current rates. Is just too expensive. And then another piece of news is this right here, that China has waived some of the tariffs and slashed some of the tariffs on U.S. Imports and quite a few things. So what this says here, that possibly, as I have been mentioning in my previous videos, that finally, possibly, we have the point where this trade war is kind of priced in and is going to subside, because nobody's really benefiting it too much if it goes too crazy. So it all lines up for the government, for the U.S. government, to finally cut rates, start printing, and for us, crypto bros, to finally make some stacks. So what our expectation is next week, also on the 7th, on Wednesday, actually coinciding together with our event here, which I really suggest you come to, you'll learn a lot. The Jerome Powell and the FOMC meeting is going to be hosted. So we really want to see, right now nobody's pricing in that they will reduce rates on Wednesday, unfortunately, but then we really care about what Jerome Powell is going to say during the press conference. And then they're expected to really reduce rates in June, and possibly this is going to be the time for the markets to finally really fully reverse. I think that because of this, S&P 500 is forward-looking, and it does kind of understand everything that I've just mentioned, and possibly that this entire summer will be the time that we've expected as crypto people. We expected big bull run in November, then we expected it in December, then we expected it in January, February. Nothing happened. The only thing that survived was basically Bitcoin. So everything else is kind of at the bottom still. If you look at Ethereum, and you're looking at, it's just sad to look at, even though it's basically second most fundamental project in the entire crypto hemisphere. And 70% of all the ecosystem of crypto is on ETH, nowhere else, and most of stable coins and TVLs is on Ethereum. So, but I spoke about it so many times before. So if you look at most of the coins, it's not looking so very great. And if you believe in the theory of sell and main go away, then it might, theoretically look even worse. And this is what, creates a lot of fear and makes people kind of exit their positions. However, what my opinion here is, considering that inflation is fine, it's going down, at least the official one, GDP is contracting, Trump is pushing so hard for quantitative easing and interest rate reductions. So possibly what we've expected in November, December, January, February has simply shifted because of global liquidity, M2 money supply, and general liquidity, where Fed cuts rates, starts putting money back into the market that it has been taking out of the market for the last years. It has been years. It was one of the hardest times ever. So overall, we've actually done well anyway. So it could have been much worse. So considering all this, I would not be surprised that the answer to this question is no. Me personally, will I be selling right now just for me to then see increase? No, thank you. Futures is one thing. I'll get to the price chart in just a second. I'll show you my trade setups once again. My swing trade's still there. My spot, as I said, I will not sell my spot. You don't even need to ask me. I will not sell my spot until I make huge bags. Once my bags explode, then I will consider it. Until then, I'm not gonna sell it for eternity. So this considering all of this, for me, I think that this whole thing has just simply shifted because of Federal Reserve not cutting rates and not doing quantitative easing. So, and right now everything is coming together for them to do it. So hopefully the summer is actually going to be inverse of what most people expect, which is sell in May and go away. And for this reason, when it comes to my trades, I showed you my trades before. I don't have any open positions right now, my P&L. So with all these trades I showed you before, it's basically still all there. What interests me the most, I still believe like we're consolidating. If we keep pumping from here, great, I'm happy. I'm holding so much Bitcoin that sometimes I want to throw up. So at this point, if it keeps going up, fine. But for me to really degen into some kind of a leveraged long trade, I really want to see really one last dip. I really want to see that liquidation event. Maybe it could be caused by India, Pakistan, two nuclear powerhouses fighting one another. That could be something, or we have this kind of squeeze in May. Sometimes we have this May squeeze that could be bought up quite quickly. And for me, the target would be still 83,000 per Bitcoin and Ethereum like 1,400. Possibly we'll never get there, but if I'm going to be taking any kind of risk on trades, I really want to see that, because Bitcoin right now is literally at a very important resistance, and we are at a very important order block here, and kind of getting into it with the leverage. It's always great to buy Bitcoin, but getting into it with leverage, I'd rather do it at an important level of 86, 83K, somewhere here as a retest, and then a consolidation, money printing from Fed, and then off we go to retest the all-time high, and then go into price discovery. Same for the remainder of the assets, to be honest. And I want to quickly remind you guys that I'm trading on Bybit right here, so there are bonuses down in the description of this video, up to 30K and 42% discount on trading fees. But please do not forget about our event next week on Wednesday and Thursday, 2-day event. You're going to learn a lot. Again, come join us, and link to the registration is down in the description of this video. And stay strong, and see you next video. Ciao.